Welcome to Capital Discussions, QuantyCarlo Education. I'm Tom Nunemaker, and my guest is Larry Richards. Today is, I guess it's, what is it, February 18th in Germany, but I think February 17th in the U.S., 2015. Before we get started, we have a disclaimer that Capital Discussions is not a broker-dealer or an investment advisor. This presentation is for educational purposes only. We don't know your situation and have no way of knowing what level of risk is appropriate for you. We're not making any specific trade recommendations. The risk of loss in trading options can be substantial, so please be aware of all of your risks prior to placing any trades. Hypothetical computer-simulated trades are believed to be accurately represented. However, actual profit or loss may vary due to market factors such as liquidity, slippage, and commissions. And with that, Larry, you have the ball and are sharing your screen, so welcome. Maybe introduce yourself a little bit for people who don't know you, and just take it from here. Glad to be with you, Larry.
Okay, thank you very much for that kind introduction, Tom, and likewise, I'm glad to be here and have this opportunity to speak to some people. Let's see, how many people do we have here today? Well, however many it is, you're all very welcome and happy to have you here today. My name is Larry Richards, as Tom said, and I began trading in the 2000s, options, and then I left a different career to enter a one-year mentorship program where Tom was at the time. That's how I met Tom at first at Sheridan Options Mentoring. So I spent a year doing that. I'm actually based in Japan. I've been living here in Japan for the past, how long has it been? 26 years or so. Basically half my life I've been in Japan, and but I was trading the U.S. market, and then we had a little earthquake, you might remember, back in 2011, and I because of various reasons, I needed to be awake during the daytime, which means that it's hard to stay up at night and trade during the U.S. trading hours. So I took a break from trading, but I did start developing some, focusing on really developing some software, which you see today in the form of QuantyCarlo. Through Dan Harvey, another mentor at Sheridan Options Mentoring at the time, I was able to connect up with David Wilt, who, together with one other entrepreneur, the three of us started this venture, and that's really culminated in last week, or about a week and a half ago, the launch of QuantyCarlo. So it's been a really exciting journey. So, you know, this first week and a half of launching QuantyCarlo, getting some real traders to actually start using it, has been exciting. We've had lots of user feedback, feature requests, we've had bug reports and forum questions. And if you don't know about the forum, I encourage you to please go and sign up for the forum. That's a really good place to ask questions and get them answered by not only myself, but also we have our developers participating, and also knowledgeable people in the community. So that has just begun in the past week and a half, and we've already got some interesting threads going. We've, based on the bug reports we've received, we've already issued one software update, and we have another one coming up soon. And so just a big thanks to everyone for all the feedback. As I was mentioning before the recording began, we have a testing partner in India, and they're really testing generalists. They test all sorts of applications, and they're really good at what they do. But they're not traders. So, there's a limit to how much they can really test drive QuantyCarlo. So it's really only now that we're beginning to test drive and discover all the different possibilities that QuantyCarlo has. And it's really going to be the trading community that really discovers the full potential of QuantyCarlo. As you can see on my screen, QuantyCarlo is, the purpose is to efficiently evaluate and optimize option trades. Now, I'm assuming that most of you have some manual backtesting experience. I certainly spent quite a bit of time doing manual backtesting. It's a fantastic way to actually learn options trading, to experiment, do trial and error, try different techniques and find out whether they are sensible or not, whether they are profitable or not. And you get a lot of visual feedback. It's a very educational experience. So we're not here really to replace manual backtesting. I think that manual backtesting will always be something that is valuable for options traders. But if you want to collect, as David was saying last time, if you want to collect statistically significant amount of data and then do it in a very consistent way, right, with no human error, and if you want to transcribe that into all the results of your backtesting into a spreadsheet, for example, collect all of those results, and then analyze them. It's a really painstaking process. It takes a lot of time, and there's just a limit to what you can do in terms of manual backtesting when you really are aiming to evaluate and optimize an options trade in a very scientific way. So that was really the thought, the idea behind QuantyCarlo, is that we want to create a tool that it really takes away all the tedium from manual backtesting and enables traders to test and ultimately to do automated optimization, self-optimizing trading plans without being a programmer. Because a lot of programmers, I know that for example Brooks has written his own backtesting software, and because he's a programmer, and so people that know how to use a programming language can do that sort of thing. But we wanted to make it available because most traders are really not programmers. We wanted to make this available to the non-programmer. So that's really the background as to why we came up with this user interface. And it's still not perfect. It has a lot of capabilities that we've built into them, but we haven't yet explored what their full capabilities are. So the capability to build symbolic expressions really just opens up limitless possibilities. It's only your imagination that limits what you can do in terms of creating trade logic. And today we're going to actually do some hands-on, going through creating some very simple rules And there's hands-on tutorial video. And some of the things that are covered in that tutorial video that some of you may have seen, we'll cover today. But we'll also explore things that you want to see, and also I plan to show some alternative means of doing the same thing, because in QuantyCarlo we've got basically 3 or 4 different ways to actually do the same thing. Let's see, before I get started though, one of the common requests that we've had is requests for more example projects. I just wanted to say that those are on the way. That's on my list of things to do. And then we have a number of product enhancements that are on the way. One common request has been the ability to browse the option chains. Okay, so we have a prototype that's internal right now that we're testing out. It's experimental. It's working, but it's not really quite ready for prime time. I'm hoping to release that in the next few weeks, because it's really helpful actually to go into, this is a web-based browser basically, to go in and browse through the historical data, especially when your job, let's say the trade that the trading plan that you've submitted to the server is doing something and you don't know why, right? Maybe there was a strike that, a very common problem is that you set up a trade, set up a set of trading rules, which we call a trading plan, and it's trying to look for certain strikes, and those strikes might not be available for every expiration. So sometimes some expirations you just won't enter the trade, and you'll get a message that says the trade has been aborted, and then you won't know why. So one of the comments that we've received is that we need to provide more feedback on why the trade didn't enter, if that's what happened, right? And so we're looking at various ways to do that, and that's more to come. I will share that. I'll keep everyone posted as we make that functionality available. So let me go through the slides here. Today's agenda. Just a quick review of QuantyCarlo, just very, very quickly. And then I would like to provide answers to some of the questions we've received already. Just very briefly, because we want to spend as much time as possible on the hands-on demo. So here I go. This is a review. QuantyCarlo's purpose is to enable option traders to efficiently evaluate and optimize their trading strategies. Like I said, manual backtesting is great, but there's a limit to how much you can do, and it's very time-consuming and tedious, and it also introduces the human error factor, and we want to take that away. Automated backtesting takes away the element of human error. It has its own challenges, but it has it's much faster, and it's much less tedious. And we think that it is really ultimately going to be the preferred way for optimizing trading strategies. And we'd like to foster a community of option traders dedicated to scientifically sound optimization best practices. And this community is already in its embryonic stage at forums.quantycarlo.com. If you're not signed up and you're not posting and asking questions, I encourage everyone to please go there, sign up, It's not the same user ID as your normal QuantyCarlo login credentials. It is a separate user ID, so you'll have to go to forums.quantycarlo.com to sign up. I encourage everyone to do that. Like I said, QuantyCarlo version 1 focuses on automated backtesting for non-programmers, and you can tweak and run pre-built trading plans, or you can build your own using symbolic expressions. We'll be doing that today. And on the data, there have been a number of questions about the data, but essentially we've got the whole U.S. market, not the futures market, but the equities and ETFs, ETNs, equity indexes, SIBO indexes from 2004 onward, and these are 15-minute time increments. I know that some of the manual backtesting tools out there have 30-minute time increments or 5-minute time increments. You find various different tools. In fact, I think if you use Think or Swim, Think Back, that's a very useful tool. It has very, very, I think, granular, like tick data that you can go back and trade on. We use 15-minute data, and we find that that's adequate for our purposes. Let's go through some of the questions. Number one, do you support VIX futures options? The short answer is yes, we will soon, and the longer answer is that we've purchased the VIX option data. I did confirm that, but this doesn't include the underlying futures prices. Now, it's a source of a lot of confusion, and if you get a chance to read Russell Rhodes' book, I encourage you to do so. It's called Trading VIX Derivatives. I've got a copy right here. But the VIX options might appear confusing at first because they don't match up with the VIX index. That's because they're not really, the VIX index is not the underlying asset. The underlying asset are the VIX futures. And so what we are going to do is to actually extract the futures price. We can accurately approximate this. Actually, Russell Rhodes was giving me some advice on how to do this. You can actually extract the underlying futures price from the option chain. So we'll be doing this when we install VIX into QuantyCarlo. Just wanted to answer that question. Another question we got was which symbols are in QuantyCarlo free, and these are the ones. You'll also find this on the discussion forum, so I don't want to spend too much time here. What's the difference between QuantyCarlo Silver and Platinum? Well, Silver has only the end-of-day prices, whereas Platinum has 15-minute time increments. So if you want to use intraday data, then you want Platinum version. If end-of-day prices are good enough for you, for example, there's certain trading strategies where I think that end-of-day data is probably perfectly adequate, then Silver is fine. Which symbols are going to be available in Silver, Platinum, and the Enterprise Edition? So we've purchased more than 4,200 symbols. Like I said, it's the whole market, essentially, the whole U.S. market. We haven't yet purchased, for example, the European options data, nor the Indian market. Those are two markets that are quite interesting for us, and I think interesting for a lot of traders. India is quite an interesting market because the middle class is growing very rapidly, and also retail options trading there is growing very rapidly. They have an index there that is actually the most liquid and heavily traded options index in the whole world as of last year. So it's quite interesting. We'd like to add that later, but right now we're focusing on the U.S. The list of symbols is posted on the forums, so I won't go into that. It's it's too long to cover right now in this webinar. But let's say one other thing I'll mention is that not all the data that we've purchased is of perfect integrity. So we do an integrity check on all the data that comes in, and only the symbols that are of adequate integrity. Of course, one thing that I've learned about historical data is that it's just not perfect. It doesn't matter which vendor you choose. The historical data has imperfections, and you have to do some data scrubbing. And sometimes, no matter what you do, you cannot repair the data. So not all, just because we've purchased the symbol and it appears in our list doesn't mean that it will end up in the server. But we will aim to install all of the most popular symbols. For example, RUT had a few data problems that we had to work on to get up to the level of quality that we require. But now it's going to be available because RUT is just, one of those symbols that is just too popular among option traders for us not to carry it, okay? Next, how much does QuantyCarlo Enterprise Edition cost? Well, it all depends on your needs. We provide quotes on a case-by-case basis, and we work together with our investor partner, Iridium Consulting in New York City, to provide on-site integration and training if that's required. Iridium's customers are the top tier 1 financial institutions, so this is sort of a new business area for them. But we can provide solutions for small institutions like proprietary trading firms or small hedge funds, basically institutions that are not quite big enough to have their own software development department. Just got another question about which 10 symbols are available in the free edition. Let's go back to that slide. Here they are. So Mush, this is the answer to your question. Pepsi, Dia, Gold, Google, Baidu, Qualcomm, TLT, VWO, ExxonMobil, and Yahoo. I would just kind of arbitrarily chose these. The free edition is there because we want to encourage traders of all levels to and all budgets to participate in QuantyCarlo and grow the knowledge base. The software that you receive with the free edition is identical to the software that you would use in silver or platinum. The only difference is the data that's available. Moving along, let's see here. We got a question. The forum says a new QuantyCarlo software update was released. How do I get it? Well, it's very simple. All you need to do is log out and then log in again. Whenever you log in the next time, the QuantyCarlo software will actually download the necessary files to update itself, and then sometimes a restart is required, and it will let you know. Okay, you'll be guided through that process. So that's very simple. And another question is it possible to customize the columns in the table of trades, for example, adding custom variables? Currently, we're not able to do this, but it's a feature in our roadmap, and so we've had feedback from several users requesting this, so we're going to bump up the priority. All right. Well, those are some of the questions that we've been receiving, and I just thought I'd go through those at the start. And now I'd like to dive into a demo.
And Larry, while you're getting ready for the demo, is there anybody on the call or on the webinar who wants to join in on the teleconference to participate, with voice while we're, to ask questions? If you want to participate, just let me know in the chat and I'll promote you and you can call in. Okay, Spencer. Yes, Spencer, you can use voice over IP. Okay, Larry, I'll keep an eye on the chat if you want to keep going.
Okay. So what I have here is a, okay. Adrian asks about a simple naked short. Let's do that then. That's a good way to start. So Adrian, what kind of strike would you like to use on your naked short? How would you like to select the strike? 10 deltas, okay? Do you want to do a put or a call? Puts, okay, good. All right, so we could use a built-in, actually we've got a built-in strike selector that's prepared. It's called strike by put delta. We could use this one, or we could build one from scratch. This one, the advantage of using the built-in one is that you've got this variable, and it's called target delta. So every time you use this, it's going to ask you what delta value you want to use. Every time you try to submit a job, it will ask you which delta you would like to use, which is good for if you want to change it every time, right, and see what the results are. But since this is an educational seminar, let's start by building our own rather than use this built-in one. We could this built-in strike selector, just to make you aware that it's available. Essentially what it says here, this is the symbolic expression up here, and the English language rendering of it says, select the strike having an absolute put delta. Remember that put deltas are negative, so we put them in an absolute value here. Having an absolute put delta as close as possible to target delta, and target delta is this variable, right? Okay, so, but what we're going to do now is, since Adrian wants to do 10 delta, we're not going to use a variable. We'll just go ahead and create one that's specifically for 10 delta. Okay, so I'm opening up a strike selector expression. So this is my strike selector editor. I've got variables here. If I wanted to add a variable, I could do that, but I'm not going to do it right now. And this is the editing panel. Now, over here on the left, I've got my attribute tree, and this is where you're going to find all of the vocabulary words in the QuantyCarlo language, right? If you want to call it a QuantyCarlo language, it's not really, you could debate whether it's a language or not. But essentially, these are vocabulary items that we have at our disposal. Now, one of the categories here is strike selection, so I'm going to expand that. And in strike selection, we have various categories: standalone strike selectors, compound strike selectors, strike by Greek value, etc. The last category is strike by option attribute. So I could select, if I wanted to select a put by its extrinsic value, or by implied volatility, or by intrinsic value, or by premium, or something else, then I could do that. And we're not going to do that today. Today we're going to do something very simple. We're going to say strike by Greek value. And we're looking at put delta. So what I'm going to do is I'm going to say, actually, what's the easiest way to do this is to take this as close as possible. So I'm going to say as close as possible. I want to get as close as possible. So this might be slightly above, you know, we're aiming for 10 delta. So you might get the 11 delta, you might get the 9 delta. If you wanted to get, for example, the highest available put that had less than or equal to 10 delta, you would do this slightly differently. But I'm just showing you the simplest way, which is to use as close as possible, okay? So now my target value, we know what our target value is, right? I'm going to take an explicit value operator from the operator panel over here and just drag this over onto the target value panel, and I'm going to put 0.1, okay? Now, I remember that put delta is actually negative, so I could say negative 0.1. I could change that if I wanted to, or I could drag absolute value, which I'll do right now. I could drag absolute value over here and surround this value with the absolute value. So now I've got the absolute value. Wait a minute. The absolute value of, that's wrong. The absolute value of a positive number is just going to be a positive number, so that's not what I wanted to do. Now, how did I delete that, you might want to know. Some people wanted to know how to delete things once you've dragged them over, and essentially the way of doing that is to, for example, here I'm putting this absolute value in. There's an invisible sort of, if you click it, you can see this little white area here, and that's selecting this whatever it is that you want to delete, and then you type the delete button and it goes away, okay? So actually what I want to do is I want to say the absolute value of my, I want to put the absolute value over here, right? The attribute that I'm looking at is put delta, which is negative, and so I'm going to put that inside the absolute value. Now I'm going to choose my target value. My target value can be positive now that I've enclosed put delta in absolute value, so I'm going to say 0.1, voila. Okay, so let's check the English language rendering. Select the strike having an absolute put delta as close as possible to 0.1. Okay, so that looks correct, but let's, just to be sure, let's go over to the strike selector preview, okay? Now, I've got some settings here that I can change. I can, this is essentially a fabricated market that we're looking at. So it will create an option chain based on the settings that you choose here. I'll just use the default settings for now, and then we can come back and change them later just for illustration. I'm clicking strike preview strike selector. So notice here that the selected strike is the 450 strike in this case. The at the money strike, you can see, it might not be easy to see, but this is the at the money strike is highlighted in a kind of navy blue here. And then you've got here the call, these are the call mid prices and the put mid prices. We've just labeled them calls and puts. You can see also standard deviations from at the money. This is based on the implied volatility that we're using. Excuse me. So it does appear that we're getting what we wanted to get, because if we look at the put deltas, we can see that the selected put had a delta of minus 0.09, which is pretty close to 0.1, which is what we requested. This 0.11 must be a little bit farther away because, but we can't see that because of the rounding.
Hey Larry,
Okay,
Adrian asked, are you using Google?
For what?
For the underlying.
Ah, okay. Actually, this is not any underlying. This data is just made up. It's made up based on these settings down here. It's just completely generated on the fly. So this is not real. This is not a real underlying asset. So what I've got here is, for example, strike interval width. I've got it set to $5 per strike. And then I've got implied volatility of 25%, and then the underlying price is at 502.34, but I can change this to anywhere I want within certain bounds. I mean, you can go take it up to 2,000. So you can't. So this is about where the SPX is today. But if you wanted to go up to the NDX, you couldn't get there. So within certain bounds, you can set these. Let me just change it and show you what would happen. Let's say if we go up to 1,000 for the underlying price, $1,006, and we let our strike interval. Let's let it be, let's say $3. Just assuming that such a thing existed. And we'll change our implied volatility. Let's take it up to 30%, a little bit higher. So we're going to get a lot of strikes, right? We're going to get a lot more strikes than what we've got here, okay? The days till expiration, it's at 45 days till expiration. I could take this out to like 60 days to expiration. That'll even make more strikes, right? So if I click Preview Strike Selector again, we're going to generate a brand new option chain. Now the strikes are $3 apart, and you'll notice that we have to scroll way down in order to get to a delta that's minus 0.1, right? So this is the selected strike in this case. Our underlying was 1,006, and the selected strike was 870 in this case. Okay. So that seems to be working. And so now what we're ready to do is to, let's save that. Let's say, let's call it put, let's say select put strike with 10 delta, okay? Give it a descriptive name. Now I want to go in and create a position model that is a naked put. So that's quite easy. Okay, Spencer has a question.
Yeah, Spencer, if you like, you can actually call in and talk versus typing. Up to you. Spencer, if you go on the Quick Start menu, you should have some communicate options, either to use the phone or to call in with your computer.
Okay. While we're waiting for Spencer, I'll go ahead and build my position model. This is going to be an incredibly simple position model because we've only got one leg. It's just to make it short. Oh, is that you, Spencer?
Hi there.
Hi,
Larry.
Spencer.
Hello. Thank you for letting me come in here. Back on the strike selector,
yes, sir.
there was an unspecified, looked like an unspecified option. The strike selector itself had three, the green, the arrow on the far right-hand side.
Yes.
Is that to accept another condition?
It is indeed. That's right. Okay, so I could put in like, for example, an or here, right? And so I could make this a more complex expression.
Okay, great. So
in reality, to be honest, I've never used this. I've never found this necessary with strike selectors, but you know, that's kind of like part of the flexibility of the symbolic expressions that we have, is that you can make them more complex, more and more complex, and nest them as deeply as you like.
Understand. My question then comes to, you had in the last simulated option chain, you had two put deltas of -10 at with different strikes. Could you then
That's right.
add in condition there to select the larger of the two strikes?
We can indeed. Would you like to do that now?
Yeah, let's just see what that looks like.
Okay. So I've got this saved. So let me create a new expression. This time I'm going to select the highest available strike that has a put delta of less than or equal to 10. Okay?
Perfect.
So what I would like to do is I'll go ahead and just say less than or equal to here. By the way, in case you don't know, these little arrows here, the meaning of these is that if it's green, and apologies to the colorblind, I know that some people have difficulty seeing colors, but these are color-coded. The green means that you can drop a Boolean expression, a Boolean operator here. The red means you can drop a strike selector, and then the red that has sort of the dotted line, this means that you can drop a compound strike selector here. So that's just to give you some visual feedback as to what's permissible.
Great information.
At any given time. I'm sorry?
I said great information.
Okay, thank you. So now what I'm doing is I'm first of all starting out with a less than or equal, and now I'm going to go over to strike by Greek value, and I'm going to, before I drag my put delta over, I'm going to put the absolute value here. Okay. Now I'm going to grab my put delta, bring this over. So what I'm saying is that my put delta is less than or equal to a certain value. And what is that value? It is 0.1. Okay, so far so good. Now, problem is, if you go to save this thing, it's not going to let you save it. Why not? Well, that's because you still haven't uniquely identified a unique strike, right? All you've said is that we're filtering out all the strikes that are higher than 0.1 delta, but there's a heck of a lot of strikes that are less than, that will fulfill this condition of less than or equal to 0.1. So what we need is we need one more filter to make sure that we're choosing a unique strike. And for that, we go over to this highest available strike expression. So I'm going to drag this one over, and we'll see what that looks like. All right. So now let's see what the English language rendering says. Highest available strike such that the absolute value of put delta is less than or equal to 0.1. Now, is that what we were looking for?
Sounds good to me.
Okay. I don't have to save it actually to do a preview. I can do a preview here. Let's go back to the settings we were using before so that we can get like several different strikes with the similar delta values. Okay, and implied volatility, raise that up to about 32%. Okay, strike selector preview. Here we go. Now this sends it off to the server. The server is actually doing the calculation. So here's the at the money strike, 1005. Let's scroll down to see which one was selected. And okay, now you're gonna the obvious thing here is that you've got two strikes that are actually minus 10. So what's happening is here is that we're displaying this as with only 2 digits of precision. But what you can't see is that there's actually other digits out here that are making these two strikes. These two strikes, the 864 and the 861, have a delta that's actually higher than, or the absolute value of the delta is actually higher because it's got some extra decimal places out here that we can't see. So this would be like probably 0.10001 or something like that. And that's why it's choosing the first one that's actually less than or equal to. So this must be exactly equal to 0.10 to as many decimal places as we check, right? So we round it off at some point, but in this case, it is precisely equal to minus 0.1. Does that make sense, Spencer?
Yes, it does.
Okay, super. So now we've got our choice, really. We've got two different strike selectors. They're both going to give us roughly the same result. So let me name this one, strike by put delta. Let's see, I can use all sorts of characters in here, less than or equal to, let's see, highest, how can I say this? Put delta, let's see, highest, let's say highest strike with put delta less than or equal to point, or let's just say 10. We know what we're talking about without putting in all the absolute value jargon. So I'm going to save that. Now we've got two that we can use in our position model. Now let's go create our position model. This is the position model editor, and we can put a short put. Right now I've got a short put selected up here, right? So if I click over here, this is these are kind of like theoretical strikes or not notional strikes, if you want to say that. And different people prefer different ways of expressing this. I'm not really sure what's the easiest way to say it, but these are like theoretical strikes. They're not real strikes. They're just kind of guidelines, and the thing that really determines the strike that's selected is the strike selector, which we will add next. But
So it's a virtual strike.
Virtual strike. Thank you very much. That's good. So this is the green line in the middle is the at the money strike virtually, and so if I click here, it gives me a graph that looks kind of like a naked put. The red line is the expiration graph, and the zero, the yellow line, the yellow curve is the T+0. And notice that if I undo that and click over here to the right, I'll get more premium, right? So all of this is just virtual. It's like a virtual market. So don't think too deeply about the way it looks. What really will determine the behavior is the strike selectors that we add later. But generally speaking, if you click farther to the left, you're going to get less put premium. And if you click farther to the right, you're going to get more put premium, which is the way markets should behave. Okay. Now I'm just going to click here, and so it's virtually at the money, but now we're going to actually select the strike. I'm going down here to the strike selector. I'm not going to give it a leg name right now because there's only one leg in this position. So we can look through the predefined strike selectors, and we'll find that we've got the ones that we just defined. So let's go with select put strike with 10 delta, okay? And I can actually preview this. Now, when I preview the position model, I'll be previewing not only the strike selection, but I'll also be previewing the profit and loss graph. So you see a more realistic view of what the profit and loss graph is going to look like when you select the first strike with a delta. Wait a minute. No, this is as close as possible to 10 delta. So we can zoom in here. Let me show you how to zoom in. If you drag your mouse from left to right, you can zoom in, okay? If you want to zoom back out, there's two ways of doing that. You can do reset zoom to 100%, or if you want to do it in a more sort of geeky way, you can just drag your mouse from right to left. That resets the zoom, okay? All of the graphs that you see in QuantyCarlo are like this. They have this behavior. Left to right zooms in, right to left zooms out. So you can get an idea of what this looks like. Here, this dot in the middle, that's the price dot that tells you what the price is right now. And then here the green curve is obviously the T+0, and then the blue is the expiration graph. Now if we go over here, it says leg 0. That's the name, that's the default name for this leg. And you've got two red cells here. Red means that we've gone short. if we had gone long, these would be green. So that's the color coding that we're using. Again, apologies to the colorblind. I know that there are lots of colorblind people out there. In fact, our lead developer for Java is colorblind, so he has difficulty seeing these colors. So this looks like the position model is doing what we want it to do. So let's go ahead and I noticed that we've been going now for about 55 minutes. Hey, Tom, how are we doing on time? How much more time do we have available?
Well, as long as you want. Normally, like to keep it around an hour, but it's fine to go over if you need to.
Okay. Well, let's aim for maybe a little bit over an hour, and then what we'll do is we can pick up where we left off. And certainly, you're welcome to send in your questions. We have a couple different ways for you to send in your questions. One is support@QuantyCarlo.com. Another is feedback@QuantyCarlo.com. Either of those will work. Tom, is there any other address, or are those the two?
Can I ask a quick question?
Oh, certainly.
Yeah, hi, Adrian. Go ahead.
All right. This list of prices that you have on the right with the strikes and all that stuff, so I guess you use this just to basically make sure that whatever condition you're creating, it works, because there's no underline here. It's just to make sure that the system accepts your conditions. Yes?
That's absolutely correct. It's just to give you some confirmation that the behavior that you intended with this strike selector and with this position model is actually being interpreted by the server the way you want it to be.
All right. And so we still have to get to the stage where you actually got to pick an underline now to run this programming that you have made, yes?
That's correct, yes.
All right. All right. So
Shall
and
we
we're
do
going to
that
get to that one on the next session.
Okay, let's do that. Let's do that very quickly now, because I know that probably everyone will feel frustrated if we don't get to that point.
Okay.
So I'm going to save this as, let's say, Larry's naked put, okay, for lack of a better word. Okay, so now we've got a position model here. And one way of doing this, there's a number of different ways of doing this. This is my position, my trading plan editor. What I'm going to do is I'm going to create an action. I go over here to the action templates and I choose execute trade. Okay, so I've got an execute trade action. The execute trade action wants to know two things. It wants to know which trade you're going to do and how many times. So we already know what trade we're going to do. We've got Larry's naked put. There it is. I'm going to pull this over here, and it opens up the editor so that we can confirm again that this is really what we want. We could edit it if we wanted to, but I don't want to do that. I'm just going to say OK. So now you'll notice that in the English language rendering, it says place the following trade, question, 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 times, because we haven't filled in the number over here. Now, I want you to notice that I could put in like 1.2 times, which makes absolutely no sense. I have no idea how the server is going to react when I do this. Probably will not. You probably will not get any trades. So please put an integer in here. We're going to check. We're going to do that. Add some checks eventually, so that we will only accept reasonable values. So now what we've got: place the following trade 4 times. So we've got an action, symbolic expression for this action to place this trade. Okay. I'm going to quickly save this.
So 4 times is the number of contracts.
That's correct.
Okay.
Yes, in fact, it says quantity here, so that's
right.
probably clearer. Okay, so we're going to say enter naked put 10 delta. Okay, I'm going to save that. Now, the next and last step before we drag it into our trading plan is we're going to create a rule. I'm clicking on this rule icon up here. See, this says new trade rule expression. Now, it wants to know when this happens, do this. This is a trading rule. So you always have 2 parts. You've got the trigger or the condition. Sometimes we call it the predicate. And then we have the action. So we already know what our action is going to be. We just created it. It's called enter for short. No, it's not. No, it's not. Enter for. Let's see here. Where is it? I don't see it here. Maybe it takes a while to refresh. I'm going to go over here to the project tab, and then I'm going to get. Here we go. Enter naked put 10 delta. That's the one we want. Okay. So now we know what the do this part is, and we need to put in some kind of condition. And actually, we always need to put a kind of DTE window. So from like 30 DTE until 20 DTE or something like that. If that's a precondition for an entry rule. So I'm going to go over here to predefined, and we've got this expression within trade entry time window. And this uses variables, so it's going to ask you, whenever you submit this, it's going to ask you what your beginning and ending DTE is. Okay, so this is just for convenience. I'm going to use this one right now. I'm going to save this as now. This is now an entry rule. So I'm going to say enter naked put. Finish. Now I've got this trade rule. Like I said, there are different ways of doing this. This is just one way of doing this. But if you want to build everything out of symbolic expressions in a kind of modular way, this is how to do it. So now I've got this rule over here, and I can just drag it over here and put it into my entry rules. Okay. And when I do that, you'll see that in the English language version over here, we've got a complete sort of rendering of what it is that we just described. It says entry rule. We've also got an entry abort rule. So the entry abort rule is basically automatically put there for you. Basically what it means is that once you get to minimum DTE, whatever you set this to be, it's going to abort the trade if it hasn't been able to enter by that time. So for example, if you set like, I want to get a minimum of $2 credit, and between 30 and 20 DTE, I'm not able to get that $2 credit, minimum credit, then it will abort, right? And you just won't trade that expiration. So here's, basically we've got no exit rules. So what this is going to do is it's going to expire, okay? and hopefully it'll expire worthless and we'll make some money. So let's give this a try. Now we've got a trading plan. I've called it Demo IC because this was an iron condor to begin with, but I've just overwritten this with a naked put. So I'll ask your forgiveness for that name.
Don't you need an exit rule?
You know what? You do need an exit rule usually, but it will accept this, and what will happen is that it will just go and expire.
Okay.
Yeah. Normally, I mean, it's obviously recommendable to have an exit rule. You know, you would not want to trade this way.
Can you put a quick one like when the loss is equal or bigger 2 times the premium received?
Sure.
Exit.
Okay. Let's do that. Let's create an expression. This is a Boolean expression. We're going to say that the loss is greater than or equal to. So I'm dragging greater than or equal to here. Now I'm going to go over and I'm going to grab my position. This is a position attribute. I've got a position and I've got a credit received, right?
Mm-hmm.
So it's greater than or equal to the credit received times 2. Is that what we want? Okay. So I'm going to say credit received times 2. And then I'm going to say my current loss, okay? Okay, so let's see. It says position current loss is greater than or equal to position credit times 2.0. So that will be my expression. So I'm going to say hit max loss for naked put. Okay. So now I'm going to create a new rule. Okay, and the when this happens part is pretty easy. I've hit my max loss. Okay, that's the when this happens part. The do this part is actually we've got a predefined action that says close trade. I'm just going to close the trade here. So when we hit our max loss for naked put, what do? We close the trade. There we go. So I'm going to name this exit at max loss for naked put. Okay. So we can go back to the trading plan, and I will now drag and drop this rule, exit at max loss for naked put. Put it into my exit rules, and here it is. It appears over here in the English language rendering, so we can confirm that visually. We can confirm that it seems to be describing what we wanted it to describe. Let me say this again, and just for the grand finale today, we'll go ahead and submit this. I've got a, okay, this is the demo IC. That's the only trading plan I have available. I've got a few market configurations defined here. I've got this IWM 15-minute increment monthly defined that I will, so how about we just do it on IWM, or would you prefer to do it on Google or something else?
Oh, no, that's fine, but can we do it like end of day? I mean.
Sure, okay.
Yeah.
What I'll do is I will go in here and I'll select my symbol. I just type IWM, okay. And then rather than 15 minute, I'll select daily. Now, do you want to do it at 16:15, or do you want to choose another time of day?
That's at 3:30. That's it.
Okay. Let's go to 15:30. And we want to do monthly expirations or weekly or monthly? Okay. And let's pick a short period of time. So I'm going to go 2014, January, just so that we can get our results really quickly. January to October, and save that. And we're going to say, what was this? IWM 2014 daily. Let's say monthly expirations. What was it? 1530. Okay. So now I can go up here. I've got this. It's already selected for. No, it's not. I'm going to select it. That's our market configuration. So we choose our underlying at this point when we submit the job. And I've got a trading account that I've called Capital Discussions. It's got $10,000 in that trading account, and it's using Reg T as margin. And now I've got this trading plan that we just created. Let's submit it. Do you want to save this? Yeah, why not? I'm going to save the job configuration. So this will go pretty fast because it's end of day for one thing, and it's only 1 year. Well, it's less than 1 year. It's 10 months. So it's going to go real fast. So there we go. We had 10 trades, 7 wins, and 3 losses. Let's notice that you can export to Excel here. I'm not going to do it right now, but you can export to Excel. And while we're talking about this, let me explain to you one feature that's coming pretty soon that I think you're going to like. In the Excel right now, all we have is this summary, and we have the table of trades, okay? But a new page is going to be added to this, and it's called the trade log. The trade log, it's already being used by the QCEE users, but and it's very popular. So what we're going to do is we're going to add this as page 3 to the Excel spreadsheet. So whenever you export to Excel, you're going to get the trade log, and basically it's got a blow-by-blow account with 1 row per option. You get all the details about what your fill price was, how much that transaction yielded in terms of credit, how many commissions, you know, all the details. I think you will like that addition. It's going to be an enhancement that will come in the next few weeks. So now finally, let's go through here. Looks like our peak risk was infinity here because it's a naked put, obviously. Let's see here. Which one would you like to see? We've got all of these were 46. Most of these were 46 days in trade, but here's one that was only 16 days in trade. And we lost money. So we must have hit our max loss here. Let's take a look at this one. This looks probably interesting. Okay, here we go. And, you know, it seems pretty obvious why we seems pretty obvious why we hit our max loss. Here we were the day before, our profit and loss was $160 down. We were $160 down. Then suddenly we had this big drop, right? And we hit $375 loss, which our credit was 300. Wait a minute. Our credit was 168. So does that seem right? It's 168, 375. Yeah, that seems right. So we've exceeded double our credit, our initial credit. Now, if I wanted to see all the strikes, I could go down here and I could click this. This is hiding the unused strikes. If I show the unused strikes, you can see the whole option chain as we go from the beginning of the trade to the end. We could play back like playing back a video if we do this. Rewind. Can play it back like that. As though we're watching a video. Or you can just hover your mouse over the top. Anyway, I noticed that we've used an hour and 15 minutes, so I think this is probably a good point to end today's lesson. So once again, thank you for your attendance, and again, Rich says, hey Rich, good to see you here. The Greek log view you're asking about is actually, you can see at each timestamp what were your position Greeks. That's all that is. So you've got the delta, gamma, theta, vega, rho. And Rich, I like that. Suggestion to have a price chart. We do have, and this is actually the underlying price, okay? But what we don't have is the P&L as a time series. So I think that was probably what you were just suggesting, and that would be a good addition to this. And so we're looking to actually add that. All right. So once again, thanks to everyone, and please join us next time.
Yeah, the next one of these will be on March 3rd, same time, and everybody who attended will be on the list to get the emails automatically, so you don't need to do anything. You'll get an email the day before, half an hour before the meeting starts.
Cool. Thank you.
So thanks everyone, and Larry, and we'll see you in a couple weeks.
Thanks a lot, everyone.
All right. Bye-bye.